So I had someone send me a message here on Patreon and asked me to help them with their entries and exits because it's one of the things that they struggle with. And so how do they find where to enter? How do they know when to exit? And what can they use to identify those things? Now, if you've seen the Bank of America, I guess the post that I made about it in the levels to watch, I'm going to be using Bank of America's charts because it is the perfect example of one of the ways that you can refine them entries and exits. But here's the thing though. You gotta stop disrespecting your levels. You know where you're getting in. You've already planned on or you've identified where you need to get out. Stick to it. And this is going to be the perfect example on these charts, all right? So let's get to it. I'm in Bank of America. And I have gotten a 30-minute time frame so I can give us some nice little bit of candles so that we can kind of mark this thing up. All right. First thing first is what we're going to need to do is identify our levels. And in this case, we're going to identify two very, very simple levels, support and resistance, okay? And establish us a little bit of a range that this stock is working with. Now, one thing about Bank of America is it does not make these heavy movements, okay? So just make sure you're easy. So what we're going to do is we're going to come up here to this top, right up in there. And I'm going to put a line here. Okay, what is this at the top? This is resistance. All right, now we're going to come down here and we're going to mark up a nice little support level that we can use. Now remember, we can have multiple support and we can have multiple resistance levels. All right, just mainly we want to focus on a little bit of a range right now. Okay, so trading support and resistance is probably one of the easiest things that you can trade. Do not ever think that something is just too simple. Support and resistance can be used as a trading method. You just have to be quick on your feet and you have to get in and get out when you know you should and don't overstay because support and resistance is never written in stone and that thing can break at any moment. All right? Now, we know what calls and puts are. If we get into a call, it's because we believe it's going up. If we get into a put, it's because we believe it's going down. Where would we enter a put? We would enter puts at resistance. Why? Because resistance is our ceiling. So, therefore, we will be looking for some sort of entry point for a put up at that ceiling, at that resistance level. Okay? So, that right there, with us finding this support and resistance here, we have established two things. We've established a potential entry and a potential exit, depending on where the price is right now. So, we go over here we see we have a major rejection there, but them sellers stepped in and knocked that thing down. They tried to get up there again. We came down. Again, down. Midway, but nevertheless, we came down. Over here again. And what happened? Exactly. We came down. So, what does that tell you? If you enter, let's just say hypothetically you get in here because you are looking at the way that they rejected it there first. We also have slightly a tweezer here, okay? And what a tweezer is when the opening and close is at the same level to where if the opening and close is at the same level, that could indicate some rejection that the price would come back down. So that right there could kind of give you a little bit of confirmation that it will come down. And rejecting at that resistance up there, I wouldn't make a move on this little first candle. I'd make a move on this candle because it closed below that first one up here that rejected at that resistance the second time. So this was the first rejection, couldn't break. This was the second rejection. And this is the candle here that I would make a move to get in because now we got a little bit more confirmation that they are looking to push it further down and not break over this level. Now, before we get to that, look at this. 53.40, let's just say approximately, because these numbers could be a little bit different. But let's just say this here is 53.40, that resistance. This support is, let's see, what is that? Approximately for 51.40. Okay, what is that? That's a $2 move. Okay, so we see that every time he was up there at 53.40, it got knocked down. Every time it got to 51.40, it got pushed back up. So when you make your move on that candle, Okay, this is the thing where it can get a little bit tricky when people say, okay, what if it starts going back up? What do I look for? What am I waiting on? Well, whenever you get your profit, take profit wherever you feel comfortable, but always pay attention to what else is taking place on these charts. And by that, with all of this here transpiring, look what we have here. We got this downside here, and we have some upward movement here. So if I see all of this happening, okay, if I see that happening, that's showing me that we have ourselves a bear flag here forming, and that may tell me that, there's a high chance that they're pushing this thing up, but they are gearing up to knock this thing further down from what I am seeing, okay? So you entered up here, and we're still down here at this bottom. Well, not at the bottom, but we're still far away from your entry point. Your entry was here, and you can kind of see us pushing up, but you may still be in profit. We come down again, pushing up. You may still be in profit depending on, of course, where you are on that option chain. But notice what it's doing. You're paying attention to what else is showing you. And that is this little bear flag here. You got to break out and boom, we finally come down to where you were looking to exit. Now, do you have to wait it out? No. You could have easily gotten in here and you could have gotten out here. You would have had another opportunity when the price came back down to get out here. Okay, so you don't have to stay until it gets to your point. Take profit when you're ready. But sometimes the charts will tell us in that in between what it's going to try to do and what you can be watching for to have confidence that move is going to be a forward move. But always take into consideration how this right here, what type of move is making, what type of increment is this thing making. This is a $2 move from 53.40 to 51.40. So you already know that going from here, from this point to potentially this point, it could give you some profit there, but just all depends on what that theta looks like too. That if you caught all of this wind going back up, how much would that burn into your profit? You have to take a number of things into consideration. If I was in this, and let's just say I had 10 contracts, and I have like a 50-cent delta, and I'm catching a $2 move. That 50-cent delta will let me know that catching that $2 move is $100 in profit. Okay, because for every dollar that stock move, I'm going to get $50. So I catch approximately $100. Now, if you do have some premium burn and this thing is pushing up, and then we do finally decide to come back down, it may be a little bit less. But that's why I say take profit when you are ready. From here to here would have given you approximately that $50 in profit before it came down, maybe a little bit less. Okay, so we kind of guesstimating with this little range that we have here. So your entry for your puts will be at resistance. Your exit for that put will be at this support, and vice versa. Your entry for a call would have been here at this 51.40, and it would have been your exit at that 53.40. It's a $2 move either way. And so the biggest thing is people not getting out. You have to get out. Don't sit in hoping that it's going to go higher, hoping that it's going to go lower, because the levels are there for a reason. And we marked up those levels for a reason because it's telling us this is where they're going to stop it out. This is where they're going to reject it. Let me get my cash and get on up out of there. Okay? So that's simple as that. Identify the levels, the support, the resistance, the supply, the demand, whichever. However you identify your levels, once you mark them up, have all plans of sticking to them. Understand the increments that the stock moves so you'll know if maybe you need to get one contract, two contracts. If you have, let's just say $200 on the day for your profit goal and you only want to do one stock, take that into consideration on the size of the move that you need to catch, what your delta needs to look like, where you need to be on that option chain to ensure that you hit that target. Okay, so there's a number of things to kind of consider. But if the profit isn't quite the goal here and it's just refining your entries and exits, this is the perfect way to practice it. Identify support, identify resistance. Once it hit either one of those levels, you make your move with a solid hold up or a solid rejection, and you stick to getting in and out when those levels are hit. Okay, so I hope that helped. And for all of you guys that may be watching this, I hope that's something that you guys can take too, because I see it a lot where people are not knowing where to get out. They're just not. And the thing is, I'm just going to be real with y'all. You know where to get out. You just hoping for more. You get greedy. That thing reverses. And now you have a sucky trade when technically the trade was going very, very well. All right. Practice it. I promise you, you will definitely get better at it. But I will see you guys in that next lesson. Happy trading.